Hey everyone, welcome back to the third part of the series wherein we are going to explain about the entire situation of the deductions. We have earlier discussed about the income tax deductions, that how we have to do it. We have to look into it, that there are certain limits that based on which you have to do the deductions, the income tax deduction especially. Now let's come to the point wherein we are going to do a CPP, which is the pension deduction. Now this deduction is a little bit less stringent like an income tax, wherein we have to look into it what's a tax slab, but in case of a pension and EI, they both have some sort of a restriction. When it comes to the restriction, the rate that I'm going to mention is for the year 2025, and these rates keep on changing it based on the year to year. So it's your duty that you always look into it before you are doing any of the deductions. Even though there are some softwares available in the market that are really helpful for us, or there are payroll providers who is going to help you out in doing the complete right calculation, but just for your knowledge, you should be aware of the percentage. Even if you're an employee and you're going to take up an employment, you should know it, that what's the number that you have to ensure that you are taking it into the consideration. For instance, when it comes to the pension, or you will call it as the major word is CPP, Canada Pension Plan, wherein for the year 2025 the rate is 5.95%, and this has a cap, with this is capped at the level of 71,300, which means if you earn more than 71,300, you do not need to pay any more CPP contribution. That's where the limit gonna end over there. But while we are calculating it, it's not gonna be the simple calculation of 71,300 multiplied by 5.95%. The way it's gonna work is, first you get a basic exemption, which is at $3,500. That means when your employer is calculating it, they are going to look into it. If your income salary is, if your salary or your total pay is going to exceed the limit of 71,300, or even it's less than 71,300, they still have to consider the basic exemption of 3,500. That means when they're going to calculate it, they're going to look into it in a way that 71,300 minus 3,500. So that's how they're going to look into it, that what's the right number, they have to do it. So now based on this, they are left with 67,800. That's where they're going to calculate 5.95%, which is $4,034.10. That's a max contribution that you have to do it. Now this is from the perspective of the deduction that employer has to ensure that they are doing it properly from their employee salary, and at the same time employee is very well aware of ahead of the time that how much deduction that they are doing it toward the CPP. But as an employer, now this is the most important part for an employer to understand, that as an employer you have a responsibility that you have to contribute the same amount towards CPP. If your employee given a contribution of $4,000, 34 and 10, that means employer has to contribute same amount. Let's take this as an example, that wherein if your employee is earning 71,300, so you have to ensure when you are paying them salary, you're going to deduct only $4,034, and the balance is the net pay that they're gonna look into it. The balance amount is the net pay, but When it comes to the same contribution which I just mentioned about $4,000, this is something it will go from the employer pocket. In a way, if you as an employer you're looking at the expense of business, your calculation will go in a way 71,300 as the gross salary of an employee, and then employer contribution, which will be $4,034. So now if you have to look at the total cost, your total cost will become $75,334 to keeping an employee who is earning $71,300 from you. So that's your total cost to company. Now the point comes in, where is this money going? If it's a cost to the company, now you are not going to remit this amount to your employee, because we already did a deduction. That means now it's your duty that your employee portion of $4,034 and employer portion of $4,034, this is something you have to give it to the government. So you have to remit $8,000.68 to government. With this, we have explained about what exactly the cost of an employee, cost to the company for an employee who is earning maximum up to $71,300. And within this, there is a new rule that has already came into effect from 2024. There is a CPP 2, which means when it comes to the CPP deductions, you are doing it for your employee. Now, as an employer, you have to confirm with your employee whether they would like to go ahead and initiate more of the CPP deduction, which is again capped at a certain limit that you always have to check into it, what exactly the limit is. But the best part about this is, by now, is employer is not gonna contribute towards additional CPP, which is CPP 2. This is only meant that if employee wants to contribute additional amount. That's it for now. Let's go move to the next part of the series, wherein we are going to discuss more about the EI factors.